Good morning, everyone, and welcome to your U.S. Market Daily Outlook for August 29th, 2025. Today, we're seeing a largely neutral market sentiment as investors digest a mixed bag of economic data. While robust GDP growth and strong non-farm payrolls suggest underlying economic resilience, concerns around rising producer prices and a softening manufacturing sector are tempering enthusiasm. The Federal Reserve's decision to hold interest rates steady provides a sense of stability, preventing any major swings in either direction. Technology and growth stocks are experiencing some rotation, while defensive sectors might see renewed interest. Key catalysts for today include the ongoing assessment of economic data and any further commentary from Fed officials. We expect the S&P 500 to trade between support at 5,200 and resistance at 5,300, reflecting this cautious equilibrium. Today's economic releases paint a complex picture for the U.S. economy. The core PCE price index MoM remained stable at 0.3%, suggesting that underlying inflation is not accelerating rapidly, which is a key comfort for the Federal Reserve. However, the producer price index saw a significant jump to 3.3% from 2.4%, indicating rising input costs that could eventually filter into consumer prices. On the growth front, GDP growth rate quarter-over-quarter final rebounded strongly to 3.3% from a previous contraction of negative 0.5%, signaling robust economic expansion. Non-farm payrolls also showed impressive strength with 73,000 new jobs added, up from 14,000, underscoring a resilient labor market, even as the unemployment rate ticked up slightly to 4.2%. Meanwhile, ISM manufacturing PMI dipped further into contraction at 48, while ISM services PMI, though still in expansion, softened slightly to 50.1. The Federal Reserve maintained its interest rate at 4.5%, signaling a wait-and-see approach amidst these mixed signals. From a market perspective, this mixed data fosters a neutral bias, with growth indicators providing a floor, but inflationary pressures and manufacturing weakness capping upside potential for now. Sectors sensitive to inflation or manufacturing health might face headwinds, while those benefiting from consumer spending could remain resilient. The Fed's stable rate decision prevents immediate market shock, allowing investors to digest the data. The S&P 500 index is currently in a phase of consolidation, reflecting the broader market's digestion of recent economic data. After a strong upward move, the index has been trading largely sideways, with price action hovering around its 20-day moving average, which acts as a key pivot point. Technical indicators like the RSI are firmly in neutral territory, suggesting neither overbought nor oversold conditions. Volume has been average during this consolidation, indicating a lack of strong conviction from either bulls or bears. The immediate support level for the S&P 500 can be identified around the lower Bollinger Band, while resistance is found near recent highs. The mixed economic signals, particularly the strong GDP but rising PPI, are contributing to this indecisive trading pattern as investors weigh growth prospects against potential inflation concerns. A clear breakout above resistance or breakdown below support will be crucial for determining the next directional move. The Dow Jones Industrial Average is also exhibiting a period of sideways movement, mirroring the broader market's neutral stance. The blue chip index is finding support at its established short-term moving averages, while facing overhead resistance at its recent peaks. Momentum indicators suggest a loss of upward thrust, with the MACD potentially flattening out. Trading volume has been moderate, consistent with a market that is pausing for breath rather than committing to a strong directional move. The rebound in GDP and strong non-farm payrolls are providing a floor for the industrial heavyweights, preventing a significant downturn. However, the contraction in ISM manufacturing PMI could be a headwind for some of the index components. Investors are likely waiting for clearer economic catalysts or corporate earnings reports to drive the next significant trend, maintaining a state of price stability within a defined range. The Nasdaq Composite, heavily weighted towards technology and growth stocks, is also undergoing a period of consolidation, albeit potentially from a position of relative strength. After an impressive rally, the index is now pausing, trading within a tighter range. It appears to be holding above key short-term moving averages, which are acting as dynamic support levels. Technical indicators show a slight cooling off from overbought conditions, moving towards more neutral readings. Volume has been somewhat subdued during this phase, indicating reduced speculative interest as investors become more selective. While the overall economic rebound is supportive of growth stocks, the slight softening in ISM Services PMI suggests a need for caution. The strong jobs report could fuel consumer spending, benefiting some tech companies, but the rising PPI might squeeze margins. The Nasdaq needs a fresh catalyst to break out of this current consolidation phase and resume its prior uptrend. The CBOE Volatility Index, or VIX, continues to trade at relatively low levels, indicating a prevailing sense of market complacency. Currently, the VIX appears to be hovering in the 12 to 15 range, which typically suggests that investors perceive low immediate risks in the equity markets. This low volatility regime implies that the equity risk premium remains somewhat suppressed, and there is limited demand for hedging against large price swings. Despite the mixed economic data released today, the Fed's decision to hold interest rates steady has prevented any sudden surge in uncertainty. However, the unexpected jump in PPY and the slight increase in unemployment could be underlying factors that, if they worsen, could lead to a quick reevaluation of risk and a potential spike in the VIX. For now, the market seems to be pricing in a relatively stable environment, but traders should remain vigilant for any shifts in sentiment that could lead to increased volatility.
Lemonade Inc. LMND is currently in a pullback phase, trading at 52.89, down 1.30% today. After a recent rally that saw the stock reach higher levels, LMND has experienced a decline, now testing its short-term support levels, particularly the lower Bollinger Band around 51.26. The price is trading below its 20-period moving average, 55.47, indicating short-term bearish momentum. Technical indicators further support this view. The MACD has crossed into negative territory with a declining histogram, confirming the bearish trend. However, the stochastic oscillator is deeply oversold at 8.39, suggesting that selling pressure might be nearing exhaustion and a potential bounce could be on the horizon. The RSI is at 46.83, nearing oversold conditions but still in neutral territory. Volume has decreased during this pullback, which could suggest that the selling is not aggressive. The mixed economic data, especially the stable core PCE but rising PPI, could affect investor sentiment towards growth-oriented insurance tech companies. While the immediate bias is cautiously bearish due to the ongoing pullback, the oversold stochastic hints at a potential near-term rebound. Invalidation for a further downside would be a close above 55.47, while a break below 51.26 could signal further declines. Turning to specific company news, an article from Fool.com on August 13th highlighted why Lemonade stock surged more than 9% higher on that day. This rally was attributed to a positive catalyst, likely a strong earnings report or a significant business development that boosted investor confidence. Such events typically underline Lemonade's strong growth trajectory and its ability to capture market share in the insurance tech space. The market's reaction demonstrated optimism regarding the company's future outlook, potentially driven by improved operational efficiency, a strengthening competitive edge, or successful strategic initiatives. While this news from 2 weeks ago was a significant positive driver, the stock has since experienced a pullback, indicating that the initial excitement has somewhat moderated. Looking ahead, investors will be keenly watching for further updates on Lemonade's customer acquisition, policy growth, and profitability metrics to determine if the company can sustain its long-term growth and reignite positive momentum. Thank you so much for joining me today. I look forward to sharing more market insights with you in our next analysis.